Hello and welcome to Markets View at Deven Choksey, the daily market podcast where we decode the Indian financial markets. Starting with the GIFT Nifty, the GIFT Nifty today is trading flat, which is indicating a flat to positive start for the domestic markets. Talking about the Asian markets, they are opening on a lower trend as well, and Nikkei falls more than 1% and Hang Seng is down more than 0.5%. So clearly the Asian market trend is weak, as well as the GIFT Nifty is trading flat. The US futures trade lower after cash market ends in red on Wednesday. US markets are off high to end lower, where Dow and S&P 500 are falling for the third straight session. So concerns coming in from the US markets as well. The energy stocks slip as oil prices decline to below $70 a barrel, which is the lowest in last 5 months. US October trade deficit is seen at $64 billion versus $61 billion on a month-on-month basis versus estimate of $64 billion. The US private payroll employers add 1.3 lakh jobs in November versus estimates of 1.30 lakh jobs. Talking about the US 10-year bond yields, they hit fresh low at 4.12%, which is lowest in 3 months post soft labor market data. The energy pack, crude extends decline for the 5th straight day, and now it has been seen falling and trading at $75 a barrel. The European markets are ended on a higher note, of course, in yesterday's afternoon, where CAC and DAX were rising around more than 0.5% each, and FTSE was also up by 0.3%. The bullion market, gold prices are rising as we see treasury yields fall and index back above 104 mark. So this is how the global sentiments look like. The US markets are showing signs of concerns. Asian markets are weak. GIFT Nifty is flat, and of course don't forget the energy pack, which is constantly declining, and bullion market has its own way of performing in the market at present scenario. Let us take a look at the trade setup for the session today and consider this as an important day, as the markets are showing a lot of action, but it being a Thursday and the weekly expiry day, there might be a volatility which will be seen in the market. Taking a look at the market close on yesterday, after a consistent run-up for the last 7 consecutive sessions, we clearly did see that there was a bearish crossover in hourly charts and increasing volatility. So clearly the index was facing resistance at 21,000 mark, while taking support at 20,800 to 20,500 area. Yesterday, the Sensex climbed around 400 points to close at 69,654, and the Nifty jumped 83 points to close around 20,938, taking the total 7-day gains to 3,684 points and 1,143 points respectively. Yes, these numbers are right. In the last 7 days, the Sensex has witnessed gains of around 3,684 points, and Nifty has witnessed gains of around 1,143 points in just last 7 trading sessions. So clearly the undertone of the market is quite bullish. The bearish formation around the crucial resistance of 21,000 amplifies the bearish sentiment. The support lies at 20,850, below which the market may witness a healthy correction in the short term. But right now, there's a lot of action which is seen. On the other hand, there are chances that if Nifty moves above 21,000 level, there might be a trigger and a resumption of a bullish trend. So clearly we need to keep an eye on the 21,000 level, and the support of course lies at 20,850 levels. If we have a look at the psychological resistance level, 21,000 mark can provide some resistance for the Nifty 50 over the next few trading sessions. So keep an eye clearly on 21,000 and 20,850. Also on the hourly charts, the momentum indicator has a negative crossover, which indicates a loss of momentum on the upside. Considering the sharp run-up in the previous few trading sessions, a consolidation is highly likely. On the upside, there are chances of 21,000 to 21,060 levels, and this might act as an immediate hurdle zone. And 20,800 to 20,730 shall act as a crucial support zone. The market breadth largely remains equal on the NSE, while India VIX, which measures the expected volatility for the next 30 days in the Nifty 50, rose by around 2.09% to 13.74 levels, the highest closing level since March 28 this year. Keep an eye as we are observing that the volatility index is showing some signs and there are some action points, and we are clearly witnessing it since the last two trading sessions. So considering all of these, let's take a look at the key support and resistance levels for both Nifty and Bank Nifty. Starting with Nifty, there is a chance and possibility that Nifty is likely to see immediate resistance at 20,959, followed by 20,985 and 21,027. While on the lower side, it can take support at 20,875, followed by 20,849 and 20,808 levels. Talking about Bank Nifty, yesterday the Bank Nifty underperformed the benchmark index Nifty 50 and formed a bearish belt hold, which was a kind of a candlestick pattern on the daily scale. The bearish reversal pattern formed at an uptrend. The index did fell around 178 points to close at 46,835. The banking index seems to have experienced profit booking at higher levels in anticipation of the upcoming key RBI policy event. Despite this, the overall market sentiment remains bullish. It is advisable to adopt a buy on dip strategy, maintaining a positive outlook as long as the index sustains above the critical level of 46,400. There are chances that immediate hurdle is positioned at 47,250 and a successful breach beyond this level is anticipated to pave the way for further upside momentum towards 48,000 level. If we have a look at the resistance and support levels for Bank Nifty, the index is expected to see resistance at 47,143, followed by 47,263 and 47,458. While on the lower side, it may take support at 46,754, followed by 46,633 and 46,439. So these are all the important support and resistance levels for the benchmark indices. Understanding the tone of the market, let us now dive into the news-based impact and the stocks which will be in news on the back of news flow. To start with, Ircon International will be in focus as the Government of India will be selling an 8% stake or 7.252 crore equity shares in the infrastructure company via offer for sale on 7th and 8th December with a floor price of 154 rupees per share. The Dr. Reddy's Laboratories will be another stock which will be in focus as the subsidiary Dr. Reddy's Laboratories SA and Koya Therapeutics Inc. entered into a development and license agreement for the development of commercialization of Koya 302, an investigational combination therapy for the treatment of amyotrophic lateral sclerosis. The next stock in focus will be Bharat Electronics as the state-owned defense company has received an order of Rs 580 crore from the Indian Army for AMC of radars. It has also received additional orders worth Rs 3,335 crore since the last disclosure on September 15, 2023. With this cumulative, BEL has received orders worth Rs 18,298 crore in FY24, which is a big number in itself. So keep an eye on BEL. 197 Communications will again be in focus as the Paytm operator will further expand its business to offer high-ticket personal and merchant loans which should be targeted at lower risk and high credit-worthy customers in partnership with large banks and NBFCs. So these are all the stocks which will be in focus. We have Ircon International, Dr. Reddy's Laboratories, Bharat Electronics and 197 Communications which we need to keep an eye on. Let's take a look at the FIs and DIs data. The foreign institutional investors turned net sellers for the first time in the last 10 consecutive sessions. Yes, we have seen a lot of buying coming in from FIs, with the latest data is witnessing some sell side as the FIs were offloading shares worth Rs 80 crore, while domestic institutional investors bought shares worth Rs 1,372 crore on the 6th of December. So this is what the FIs and DIs data looks like. With this, we come to the wrap of the podcast session for today. To sum it up, there's a volatility which is seen in Bank Nifty. Of course, keep an eye on the global market setup. We have seen that the undertone of the market has been quite bullish, but consider that today is the weekly expiry and so keep an eye on the volatility which will be seen in the market. We will always hope that the markets show action-packed results, but you have to be cautious at all times. Nevertheless, irrespective of market conditions, research is the backbone of successful portfolio creation. Wealth creation is an art that we understand. We at Deven Choksey have our exclusive research services which are powerful and successful. To avail our exclusive research services, we invite you to join us. Just click on the link below and you're done. Fill in your basic details and our team will reach out to you. So don't wait any further and embark on the wealth building adventure together. Thank you and have a nice day.